Hello and welcome to Markets View at Deven Choksey, your daily market podcast where we decode the Indian financial markets. To start with GIFT Nifty, the GIFT Nifty is trading with a premium of 75 points from Nifty Futures Tuesday close, which is indicating a gap up start for the Indian markets. As we see, around 75 points of premium and a positive up move in GIFT Nifty is witnessed to start with. Taking a look at the Asian markets, while yesterday the Asian markets were showing signs of volatility, but this morning Asian markets have rebounded across the region from Tuesday's broad sell-off. The Nikkei, the Hong Kong markets are trading with green signals, where the Nikkei is trading with an up move of around 532 points, and Hang Seng markets are also trading with an up move of around 50 points to start with. Again, taking a look at the US markets, the stock futures rise Tuesday night after the S&P 500 and Dow has slipped for a second day. The Dow and S&P are still showing signs of volatility and downtrend, where Dow is weak by around 79 points, but the technology heavy counter Nasdaq has taken back the support and is trading with an up move of a slight up move of around 50 points. If you remember the yesterday's trend of the US markets, it was quite weak, as all the three Dow, S&P and Nasdaq were trading with red signals. Again, talking about the energy pack, if we have a look at the Brent crude and the natural gas, Brent crude is trading in the range of around $77 a barrel, and natural gas is trading with signs of volatility and concerns with a downtrend of around 0.5%. And last but not the least, the gold rally cools as dollar holds ground. US jobs data are in focus. So consider the economic indicative action and the impact of it on the global markets. It's the 6th of December, and let's now take a look at how the trade setup for today looks like for the domestic market. Of course, like every day, taking the cues from what happened yesterday, given the support-based buying for yet another session with a consistent gap-up opening and formation of higher highs and higher lows for 6 days in a row, we are clearly positive about the market and the sentiments. Of course, the undertone of Indian domestic market is on a positive front. If we talk about the Nifty 50, we clearly expect 21,000 mark in the coming days, and holding the same can take the index towards 21,500 mark. Fingers crossed. With support at 20,700 to 20,500 area. The momentum is clearly seen, and we in fact anticipate and expect that the momentum sustains for the rest of the month as well. If we take a look at what happened yesterday with the Sensex rallied around 431 points to close at 69,296, while the Nifty 50 climbed around 168 points to close at 20,855 and clearly did show signs of bullish pattern. This pattern indicates that the index has seen some profit taking but has seen buying interest at lower levels. The prevailing trend stays positive, support by the critical moving averages. Towards higher levels, there are chances that Nifty will face resistance at 21,000, a zone where significant call writers have positioned themselves. Conversely, the support is situated at 20,700 on the lower end. On the upside, there are chances that 21,000 to 21,060 shall act as an immediate hurdle zone, and 20,720 to 20,700 shall act as a crucial support zone and should also be kept as a trailing stop loss for the longs on the index. If we talk about the volatility, India VIX, which measures the expected volatility in the Nifty 50 for the next 30 days, climbed for yet another session, closing around 3.57% higher at 13.46 level, the highest level in the last more than 8 months. The broader markets did not trade in line with the benchmark indices, and the breadth was also in favor of bears, which is cause of concern because we clearly did see that the broader markets, particularly mid cap, small cap, both were supporting the markets, but now where the benchmark indices are performing, the broader markets are taking some rest. So considering all of these sentiments, let's take a look at the key support and resistance levels for the major benchmark indices. Starting with Nifty, Nifty is likely to see immediate resistance at 20,869, followed by 20,905 and 20,963. While on the lower side, it can take support at 20,752, followed by 20,716 and 20,657 levels. Now taking a look at Bank Nifty, well, yesterday the Bank Nifty has also seen a positive opening and provided healthy support to the market. The index closed above the 47,000 mark for the first time, rising 581 points or 1.25% to 47,012 and clearly did showcase some action. The hourly momentum indicator has triggered a negative crossover, which is a sell signal, and hence we can expect some consolidation in the range of 46,700 to 47,300 for a short-term perspective. Overall, there are chances and clearly the signs are positive still for Bank Nifty, and we expect it to touch 48,000 from a short-term perspective. The index is expected to see resistance at 47,186 followed by 47,322 and 47,542, while on the lower side it may take support at 46,745 followed by 46,609 and 46,388. So these are the important resistance and support levels one needs to consider. Don't forget that the undertone of the market is bullish at present, but you have to always be cautious because volatility can anyway come in from anywhere. Now let's take a look at the stock-specific action, the stocks in news on the back of events and happenings on the exchanges, as we did see post the market lows. To start with, State Bank of India will be in focus as SBI is acquiring 20% stake held by SBI Capital and SBI Pension Fund for 229 crore. With this transaction, SBI's stake in SBI Pension Fund will reach 80%. The next stock in focus is Max Financial Services as V. Viswanand, Deputy MD, will step down from office and as a board of director member in Max Life Insurance Company after the end of his tenure on 31st of December 2023. On the list, the other stock is Bank of India. The public sector lender has launched its qualified institutional placement with a floor price of 105.42 per share. GRM Overseas will be another stock which we need to focus on, as the company has approved the appointment of Atul Garg as MD of its subsidiary GRM Foodcraft. Atul Garg will hold the post for 5 years. Axis Kids Technologies. The company has acquired a 100% stake in Epcogen for 26.25 crore. Epcogen is engaged in the engineering, design and solutions for energy space. The next stock in the list is JB Chemicals and Pharmaceuticals, as Lakshya Kataria has resigned as Chief Financial Officer and key managerial personnel of the company due to personal reasons. HDFC Bank is another stock we need to focus, as the country's largest private sector lender has sought approval from the shareholders for the reappointment of Sashidhar Jagdishan as the Managing Director and Chief Executive Officer of the bank, and the appointment of V. Srinivasa Rangan as an Executive Director of the bank. The next stock in the list is Power Grid Corporation of India. The public sector undertaking has received a letter of intent for the establishment of an interstate transmission system project in Gujarat. So these are all the stocks which will be in focus on the back of news. Let's quickly take you to the FIs and DIs data. The foreign institutional investors bought shares worth Rs 5,224 crore, while the domestic institutional investors sold shares worth Rs 1,399 crore on 5th of December. So clearly buying seen from FIs, but the DIs are selling around 1399 crore. So this is how the trend and the setup for market looks like for the session today. With this, we come to the wrap of our podcast. To sum it up, there's a lot of action happening in the benchmark indices. However, the broader markets are not performing as the benchmark indices if we compare both of it. We only expect that this undertone sustains and the markets see a constant up move in the entire December month. Nevertheless, as we always say, that irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.